we are going to look at the purpose of management accounting systems, modern business approaches that use management accounting, Kaplan on relevance lost, the modern management accounting and modern management accounting approaches, and the ICA management accounting syllabus and techniques you are supposed to know there, and the difference between cost control and cost reduction. Now, the purpose of management accounting is to provide information to managers that can be used to help them with making decisions. Now, traditionally, management accounting systems have provided information obtained from accounting records and other data within the organization. Commonly used management accounting techniques have included absorption costing, marginal costing, and cost volume profit analysis, which states how or which shows how a change in cost and volume can affect profit. We have budgeting, we have standard costing, and budgetary control and variance analysis. Now, evaluation of management accounting information. Now, management must be provided with information that is relevant to its purpose. The information provided should take account of the following issues. And what are the issues we are talking about? These issues include what managers do, are you getting, in terms of decisions, or what decisions do they need to make? What are the key factors that would affect those decisions? And what are the critical items of information they need for those decisions? So we can ask questions like, what decisions do we need to make? What will affect our decisions? What items do we need for our decisions? Okay. Now, key questions might be, is the information provided so relevant to the decision needs of the managers? Are you getting it? Is the information provided sufficiently comprehensive for those needs? Is the information provided reliable? Is the information provided available when needed? Is the information provided in clear and understandable form? Are the key items of information drawn to the attention of the manager, such as issues relating to controllability, trend, or materiality? Does the benefit of having the information justify the cost of providing it? So, in actual terms, when we are looking at management accounting information, it should have some characteristics, okay, that tell us that that information is good information. So you can use the mnemonic accurate to remember this. Accurate. Okay, you can use accurate to remember this. So just like we are asking ourselves these questions, we are saying that management accounting information, for it to be good information, it must have the following attributes. So we can say attributes of good management accounting information, or attributes of a good management accounting system. So the information itself must be accurate. It should be clear, straight to the point, and it should be what is intended to be provided. It shouldn't be vague. It should be simple, clear, and straight to the point. And it should reflect what it was meant for. That proves it is accurate. It should be complete. We are saying that the information provided by management accounting system should be free from error. It should be unbiased. It should be error-free. It should be reliable. Okay, that is complete. We are saying that it is cost beneficial. And we were saying that does the benefit of having the information justify the cost of providing it? Is the cost less than the benefit you are getting from it? Then it is cost beneficial. Then we are saying that it should be user friendly. The person to whom the intended information is given should be able to use that information. We have relevance. Is the information able to influence the decision of the person using the information? We have accessible. Is the information easily accessible to the user? We have timely. Is it provided at the appropriate time to make the decisions that are required? And finally, we have easy to use. We have easy to use. So the information should be easy to use. So user-friendly here has to do with understandability. Can the person understand the message being provided? So you can make it understandable or user-friendly. So these are the characteristics, and the questions that we have seen can be summarized into these factors using accurate. So those are the characteristics of good management accounting information. So we move. Now, modern business approaches. Business organizations faced with an increasingly competitive global market environment must be able to deliver what the customer wants more successfully than their competitors or rivals. This means making sure that they provide quality for the price and customer satisfaction, including the delivery, reliability, and after-sales service that customers want or expect. So many businesses compete with each other on the basis of one, product or service quality and price, delivery, reliability, after sales service, customer satisfaction, that is meeting customer needs. And these are critical variables in competitive markets and industries, meaning that if you want to succeed in a particular industry as a business, you must what? You must prepare well around these areas, and also so that you can do better than your competitors. That is what we call competitive advantage. So if you want to compete well, you must deliver on time, you must be reliable, you must mostly provide after sales service, keep customers satisfied by meeting their needs, and produce what better and quality products or service. And the price that should be given should be what can get you the customer, or that can make the customer stay. That's what we call customer loyalty. Now we look at Kaplan on relevant laws. Robert Kaplan argued some years ago that management accounting systems had lost their relevance. Why? What did he say? He suggested that the information needs of management had changed because of the development of modern management techniques, but that the information provided by management accountants had not kept pace with these developments. Kaplan's criticisms of traditional management accounting included the following. One, traditional absorption costing, where overheads were absorbed into costs at a rate per direct labor hour, provided information of limited value in a manufacturing environment where production processes are highly automated, and production overhead costs is a much more significant element of cost than direct labor. And this is true. In the past, we mostly were absorbing on arbitrary basis where we guess. Okay, so you can't tell me how much of rent goes into a bottle of water, which we sell. No, so, and mostly we were using labor. But in the modern sophisticated production environment, we have a lot of automations. I don't think we can depend on labor to absorb such costs. It wouldn't be fair. So we need to look at an appropriate basis. And now traditional cost, it renders traditional costing somewhat useless. And also traditional management accounting focuses on manufacturing costs, whereas many companies and other organizations operate in service industries and provide services rather than manufactured products. So you can all agree that manufacturing costs should not be the focus. We have to change the focus. Now, the traditional focus, Kaplan also argued that the traditional focus of management accounting has been on cost control or cost reduction. Lower costs meant that lower prices can be charged to customers or higher profits can be made. However, many companies now seek to increase customer satisfaction, which is the key ingredient now, okay? Customer satisfaction and also to meet customer needs, because now marketing has evolved to this level. So to meet customer needs, other factors in addition to cost can be important, particularly product or service quality. Product or service quality. Traditional management accounting ignore factors such as quality, reliability, and speed of service. In the past, people were more engaged in selling rather than marketing. Now we are in the phase or period of marketing where it beats traditional management accounting. So now factors such as quality, reliability, and speed of service is important to ensure long-term success and also customer satisfaction. So what are some modern management accounting techniques and approaches that we need to know? Management accounting systems need to recognize the factors that are critical for business success that management needs to know about. So these factors may be one, non-financial as well as financial factors, longer term or strategic in nature as well as short term, strategic information or strategic factors which are concerned with objectives and strategies, as well as tactical which are concerned with day-to-day management control, and also related to factors in the business environment as well as to factors within the business entity itself. In other words, making use of external as well as internal information can help the business succeed. Okay, so management accounting information and management accounting systems must provide the information that managers need. For management accounting system to be the main management information system within an organization, it must be able to provide a necessary variety of information, financial and non-financial, long-term as well as short-term, using suitable techniques of analysis. In addition, the growth of awareness and concern for environmental issues means that the organization stakeholders require information about the environmental impact of that organization. So management accounting system must be able to provide such information. So when you are talking about an organization, the whole thing about the organization is whatever you are doing, are your stakeholders aware of it? Are they satisfied with that? Because they are the people interested in making your business as it is. And when they require information about the organization, it must be provided. You must also consider how your organization is impacting the environment, which will come and look at techniques such as environmental management accounting. Now, in the ICA management accounting syllabus, what are the things that you need to know? There are some particular modern management accounting techniques that you need to know. So we have things like throughput accounting, very important for your exam. We have to look at throughput accounting. We'll look at it under chapter 3. We have environmental accounting, which we'll look at under chapter 3. We have activity-based costing, which we'll look at under chapter 2, but features a lot in your exam. These techniques feature a lot in your exam. So if you really want to pass management accounting, the theoretical part mostly comes from these areas. So we have total quality management under chapter 4, the balance scorecard under chapter 3, benchmarking, chapter 3, value chain analysis under chapter 3, business process reengineering, chapter 3, continuous improvement in chapter 4, and just-in-time systems under chapter 3. Now, all these techniques are interrelated. I want you as a student to look at the interrelationships between these different techniques, and that is how you can pass this paper. So this will be explained in the following chapters as indicated above. The syllabus also requires knowledge of cost control and cost reduction. And these two terms mean different things. We will explain them after this session. So what are they? Cost control and cost reduction. Now it says here, cost control is the process of monitoring and regulating expenditure. So controlling is not reducing. Controlling can lead to reduction. So let's see. Monitor, regulate, that is cost control. I want you to have these keywords. So cost control has to do with the monitoring and regulating of expenditure. Okay, that is what we call cost control. And cost control should be an ongoing activities for all companies. An organization is willing to spend money, but does not want to waste it. The term cost control implies control of cost to achieve a certain level of activity. So controlling your cost to achieve a certain level of activity is what we call cost control. Now, cost control is an ongoing management process which should commence from the start of the business. Cost control is achieved through certain targets against which actual performance can be compared. So you have certain targets. We have to look at how to compare what we have actually made against our targets. That is a way we can control our costs. Now, variance analysis is an effective cost control technique. So sometimes in the exam, they can ask you techniques for cost control and techniques for cost reduction. Now, we have seen one, variance analysis, an effective cost control technique. Both positive and negative variances should be investigated. This helps in controlling costs. Negative variances might indicate that something is going wrong and corrective actions should be taken. Positive variances might indicate that the manager has found a new and more efficient method of carrying out a task. It might be possible to spread this new approach throughout the business, thus reducing costs. So you remember that I told you that the end result of cost control will lead to cost reduction. So what then is cost reduction? This is the process of identifying one and eliminating unnecessary costs to improve profitability. Whereas when we saw cost control, it had to do with what? Controlling your cost, setting priorities. You get the idea. Identifying areas and trying to improve those areas. But here it has to do with identifying and eliminating unnecessary costs. Look at the differences in them. It has to do with regular monitoring, looking at areas, prioritizing activities, regulating those areas. Are you getting it? And that has to do with the prioritization, monitoring, and so on and so forth. Okay. You should put in efforts to try to what? Reduce cost to an acceptable level. And you can use cost control to do cost reduction. So when you control cost, you end up reducing them. So the end result of cost control is cost reduction. Cost reduction is therefore a subset of cost control. So cost reduction is the process of identifying and eliminating unnecessary costs to improve profitability. Cost reduction is a reaction to a problem. You see that this cost is high, you try to reduce it. An organization might find itself in financial difficulties, and so it tries to reduce its costs. It could try to do this by also closing this departments and dismissing staff. Okay, that is what we call cost reduction. Now, our next topic will be ethics in management accounting, which is a broader topic. So we will end this session here and continue with ethics in management accounting.